A company with a price to earnings around 1, a dividend yield about 38%, the market cap is about 2.2 billion, and if you believe, this company ZIM made 2.1 billion in earnings last year, 2024. So you look at the market cap and their earnings, and you can see that the price to earnings is around 1. An amazing opportunity. Amazing bargain. While you buy this company at the price to earnings around 1, you also get a dividend close to 40%. What a real opportunity. Why don't more people choose to invest in this company? When you see something like this, you sell all your assets and put all your money in this company. But, don't rush, because you also have to understand how this business operates. What's the catch with this business? Because if you look at the stock price, year to date, yes, in 1 year it has doubled. Year to date went down 19%. But if you look at their fundamentals, their earnings, they are quite amazing. But why the stock price goes down 19%? Why is that? And why don't more people invest in this company, which right now, according to their financial, is a bargain, a real bargain? Now, let's answer this question. If you look at the stock price over the last years from its IPO, $12, then up 600%, amazing, and then down 90%, and then a rebound. And by the way, during this period, when the stock price was about $68, ZIM was paying a dividend yield over 100%. So you look at the revenue, 8.4 billion revenue, and net income 2.1 billion. Cash flow from operations, 3.7 billion for 2024. So an amazing opportunity. And you can see that for 2024 they paid a dividend of about $8 per share. And the stock price is around $18. So close to 40%. Amazing. And then if you look at their guidance for 2025, you can see that they expect adjusted EBITDA to be between 350 million to 950 million, or EBITDA between 1.6 billion to 2.2 billion. Now you can see that the earnings for 2025 will decline a little, but they won't be negative. You will have a decline from 2 billion, but they won't be negative. So they will continue to pay a dividend, and they have a policy to pay between 30 to 50% of their net income in dividends. So you can expect another dividend from this company. Now, let's answer that question. Why don't more people invest in this company? You look at the financials over the years, and you can see an increase in revenue, and then a decline, and then another increase. And why is that? So if you want to make money with any company, you have to understand why the revenue goes up and also their profits. Why do they go up? And if you can answer that question, then you can easily predict the future of this company or other companies. So the idea is to understand what ZIM does. As you probably know, this is a shipping company. And they make money by shipping the freight based on some rates. There is an index called Containerized Freight Index, and based on these rates, ZIM makes money. They charge these rates for every shipping service. And as you can see, during the last 5 years, shipping rates, freight rates better said, in 2020 were around $814. And you look at the revenue in 2020, close to 4 billion, and they succeed to make a profit. And then 2021, 2022, freight rates went up to over $3,000. And if you look at ZIM, during that period, also the revenue went up to $10 and $12 billion. What does this mean? Well, I think you already know the answer. The revenue depends on freight rates. If freight rates go up, then ZIM will make more money, and also they'll be able to make a profit and pay that huge dividend over 40% or 100%. So this is the key. When rates go down, for instance in 2023, $900, ZIM, 2023, a loss and a decline in revenue. 5 billion revenue, 2.7 billion in net loss. During that time, during that period, the stock price went down $15 from highest peak $80. So a decline of 80%. And now rates have started to rebound to over 1600, and so the stock price and also the revenue, 8 billion, 2 billion in profits, and so the stock price over 240%. So to predict the future of this company ZIM, all you have to do is to predict the freight rates. If they go up again, ZIM will make more money. They can deliver better profits and pay that huge dividend. But as you can see more recently, the freight rates in 2025 have started to decline from 1800 to 1400. But the stock price hasn't reacted that much. You see that for the last 1 year, the stock price was about the same, $18. Of course, year to date, the stock price has declined by 29%, but then has started to rebound. And year to date, you have a decline of close to 20%. Now, why is this? Why ZIM doesn't react to freight rates anymore? Well, you have to also understand the geopolitical tensions around the world. Because as you probably know, ZIM is a company from Israel, right? You can see here, Israel. And they make money based on the demand and supply. And when you have conflicts around this area, Persian Gulf, the demand for shipping services gets higher. Because as you can see, when you have a conflict between Yemen and the US in this region, those shipping companies have to choose another route. Instead of going through the Suez Canal and reach Europe, they have to choose another route, a longer route. And the cost is higher, and also the demand, because it takes more time to ship those products. And if you read the news about Yemen, you can see the general of Yemen, his speech.
نصرة وإسنادا للشعب الفلسطيني المظلوم وردا على مجازر العدو الصهيوني المجرم بحق إخواننا.
Yes, and if you continue, you'll get crazy. But be aware that those people like this, will push the rates higher, will push the demand higher. And that's why ZIM doesn't react to a decline in shipping rates right now. It takes more time. Because during 2021, 2022, you had that pandemic. Nobody was able to work. And that's why the demand was higher. Shipping rates went up. Then in 2024, you had another conflict. Ukraine, Russia. And of course, other conflicts in Israel, with Gaza. And now, more recently, they started with Yemen. And you see here, they blocked this canal, Suez Canal. So the more conflicts there are, the higher those rates will get, or they will stay around this level. And the stock price anticipates the future. If the demand is likely to go higher due to more conflicts, the freight rates will increase, and so the stock price. But for the moment, you can see some imbalances. Freight rates going down and conflicts increase. That's why you have to analyze very well not only the freight rates to look at this graph, but also the geopolitical tensions, especially in this region, Israel. And of course, also the US. And of course, if you look at ZIM, you can see their revenue, and they disclose the regions: Latin America, Intra-Asia, Atlantic, Pacific, and cross-Suez. Now, you can see that cross-Suez doesn't represent a big part of the revenue, but any conflict related to Israel will likely to affect the demand for freight rates, especially for companies that operate in that region. Freight rates may stay around this level based on the current situations, but if those conflicts decrease, the US eliminates all the rebellion, then freight rates will go down. And if that happens, also the stock price will go down, and they won't be able to make so much profits, over 2 billion, as it happened in 2024. So it all depends on freight rates. If they go down, and they are likely to go down, because nobody wants to pay those high prices, especially here in 2024, they want to pay low prices, around 1,000. So freight rates are likely to normalize in the long term, to be around 1,000, as it happened in the past. This is the goal for every government. They don't want spikes like this, over 4,000 in the cost of rates. They don't want this. But of course, when this happens, shipping companies make a lot of money. That's why you have to be very careful, because those rates are likely to stabilize over time, as it happened in 2023. And when that happens, ZIM won't be able to generate so much profits. 4 billion in earnings in 2022, or 2 billion in 2024. They won't be able to do that anymore. So be very careful when you invest in this company. Don't buy the highest peak and you think that if they are paying a dividend over 100%, the stock price will do well in the future. No, because you see what happened. 2022, when the dividend was over 100%, and then the stock price has started to decline over 90%. And you don't want to invest 100k in this company at the highest peak and have a decline over 90%. You don't want that. And if you look at my past videos, you can see that I predicted this decline. When the price was around $50, I said that this company will decline. But few people listen to me. Same here. You'll have this dividend. They will continue to generate some profits because they already have some contracts signed with these high rates. But if you also look at the presentation, you can see their guidance for 2025. Earnings before interest and taxes are expected to be around 350 million to 900 million. So you will see a decline in their earnings about 50%. From 2 billion, 2.5 billion better said, earnings before interest and taxes, to close barely 1 billion. They might report 350 million. And of course their final earnings will be lower because they have to pay interest and taxes. So you might expect maybe $200 million, the lowest scenario. And if that happens, you will get only 50% of their earnings. That means a dividend of around $100 million. And now compare a dividend of $100 million with 2024, 961 million total dividend paid. You see a huge decline in the dividend. And when that happens, also the stock price will decline. So you have to be very careful with this company. Buy when you have an advantage, when the stock price is in your favor. The odds are in your favor. So that's it for this video, and if you have other questions, please let me know in the comments.